Now case scenario number 7. Case scenario number 7 is on Ram Builders and Developers. Is the sole proprietorship concern of Mr. Ram. Sole proprietorship concern is same as individual. It is different than partnership firm, company, HUF, AOP, BOI. It is sole proprietorship concern. The main business of the concern is construction, development and sale of residential and commercial units. Ram Builders and Developers developed a project named Luxuria Heaven, which has both residential and commercial units. Construction is carried out with its own funds. It obtained certificate of completion, that is CC certificate, for the said project with effect from 31st March 2022. That means the certificate was received last year, financial year 21-22 last day. Okay, Ram sold majority of the residential units and commercial units in financial year 22-23. Majority units are sold. However, around 30 residential units and 15 commercial units were left out or were held by him as stock in trade as on 31st March 2023. Question is basically on these 30 and 1545 units. During this period, there was a slum as in recession in the real estate sector. So in order to earn some extra income from these units, Ram incidentally let out some of the units which were held as stock in trade. So these 30 and 45 units which were held as stock in trade, he is letting them out. The details of units constructed, sold and held as stock in trade are given here under. One by one we will be discussing. We have 1, 2, 3, 4, 5, 6, 7 different columns. Particulars: total units constructed, units sold, units left out or held as stock in trade as on 31st March 23. Out of these units, how many units are let out during the year and how many units are lying vacant, and the amount of actual rent per unit per month. 1, 2, 3, 4, 5, 6, 7 columns are there. Number 1, residential units. Number 2, commercial units. 100 residential units were constructed, out of which 70 are sold, 30 are left as stock in trade. Out of 30, 10 are let out LOP and 20 are lying vacant, and the rent is 10,000 per month. That means 10,000 per month into 10 properties which are let out, rent would be 1 lakh rupee per month. This is per month. This is the story from the beginning of the year. That means it will be applicable for all the 12 months. Second, commercial units. 40 units were constructed, 25 were sold and 15 were left in the closing stock. Out of 15, 5 were let out LOP. So when the property is let out, whether it is a commercial property or it is a residential property makes no difference. Let out is let out, and 10 units are lying vacant out of total 15. So these 5 units were let out at the rate of 18,000 per month. 18,000 per month in respect of each of the unit. That means here the rent would be 90,000 rupees per month. 90,000 per month for all of them. And then total is given to us. Total is not required. We don't need the total. So computation of income will be with regards to these 10 units and these 5 units which are let out at so and so rate. Now let me tell you, this income will be taxable under which head? This income will be taxable under income from house property and not under the head PGBP. Why it cannot be offered under the head PGBP? Because it is given in the first paragraph that the main business of the concern is construction, development and sale of residential and commercial units. Letting out of the properties is not one of their businesses, otherwise they would have given it to us. Yes, of course we can apply that Supreme Court decision of Chennai Properties and Investments 2015, but then for that we need further information which is not given. So by default, rental income from letting out of the house properties, whether residential or commercial, earned by a builder who has constructed these properties, income will still be taxable under income from house property only, and accordingly 30% standard deduction will be allowable. Further, out of the residential units sold, 5 residential units were sold to his friend Gaurav. How many residential units have been sold? Residential units, first point, 70 are sold. Out of 70, 5 of them were sold to his friend who is also a real estate developer. Sale took place on 15 February 2023. Please underline that. For rupees 20 lakhs each. 5 units into 20 lakhs each, 1 crore rupees it is sold for. However, the friend, that is the buyer, Mr. Gaurav, is also a real estate developer. The stamp duty value on the date of sale, that means on 15 February 2023, was rupees 23 lakhs each. Now if the builder is selling the property, then income is taxable under the PGBP. Therefore, provisions of section 50C will not apply. instead of 50C on same lines we have section 43CA under the head PGBP, which is on the same line, that the consideration for transfer or consideration for sale will be either actual or will be stamp duty value as on the date of registration, whichever is higher. Actual sale consideration is 20 lakh per flat and the sale consideration and the stamp duty value is 23 lakh. Now stamp duty value is 23 lakh on 15 February 2023. According to section 43CA as well as 50C, as per both of them, stamp duty value can be taken into account only if stamp duty value exceeds 110% of the actual. That means it should exceed 110% of 20 lakh. 110% of 20 lakh will be 22 lakh. So stamp duty 23 lakh is definitely exceeding 110%. Therefore, stamp duty value will be taken as a ultimate sale consideration. However, in the same section 43CA as well as in 50C, both the places, there is a provision that it should be stamp duty value as on the date of sale or as on the date of registration. However, instead of stamp duty value as on the date of registration, one can take into account stamp duty value as on the date of agreement. However, stamp duty value as on the date of agreement can be taken into account. If this is lower, this can be taken into account provided some amount was received by seller by way of account payee check, account payee draft or electronic clearing service or other prescribed electronic modes on or before the date of agreement. Stamp duty value as on the date of sale or date of registration is 23 lakh. Actual amount is 20 lakh. We need to know the date of agreement and the stamp duty value as on the date of agreement. So further it says, however, agreement of sale, this is the date of agreement, was entered into on 1st November 2022. So agreement of transfer, date of agreement is 1st November 2022. As on that day, what was the stamp duty value? On which date the stamp duty value was 22 lakh. So which value can be taken into account? 22 is lower, but 22 can be taken into account only if some amount was received by Mr. Ram by account payee check, account payee draft, etc. from Gaurav. Mr. Ram received 1 lakh rupee by way of account payee bank draft on 1st November 22 itself, on the date of agreement itself, from Mr. Gaurav. If some amount is received by way of account payee bank draft, then in such situation one can take into account 22 lakh. So in such situation, actual sale consideration is 20 and the stamp duty value to be taken into account is 22 as on 1st November 22, and 22 lakh does not exceed 110% of 20 lakh. It is exactly 110% of 20 lakh. Therefore, stamp duty value will have to be ignored and only 20 lakh will be taken into account. Based on the facts of the case scenario given above, choose the most appropriate answer. 7.1. While computing the total income of Mr. Ram, the income from residential and commercial units which are let out during the year will be taxed under the head 15 residential units and 5 commercial units are let out. They will be taxed under which head? The answer, they will be taxed under the head house property only and not under the head PGBP. Our answer is A. Let's check what's Institute's answer. Institute's answer is also A, income from house property. 7.2 now. What would be the tax treatment of vacant residential and commercial units held as stock in trade? Now if you recollect, section 23 clause 5. 23.1 was LOP, 23.2 was SOP, etc. 23.5 was stock in trade, properties held as stock in trade, which is possible for builder or property developer. For them, the GAV NAV will be nil, annual value will be nil. For what period? For 2 years, first 2 years from the end of the financial year in which CC certificate was received. Construction completion certificate was received. Now construction completion certificate was received on 31st March 2022. End of that year plus 2 more years till 31st March 2024, the income will be nil. And right now we are going through financial year 22-23. So in 22-23, the income from properties held as stock in trade will certainly be nil. The correct answer is the annual value of both residential and commercial units would be nil for AY 23-24. Hence, no income is chargeable to tax under the income from house property. Other options are wrong, but still let's just check out option number B, which says both residential and commercial unit would be deemed to be let out and expected rent would be deemed as annual value. This is wrong answer. If it says both of them will be taxable. Option A says that vacant residential unit income would be taxable under the house property and commercial unit will not be deemed to be taxed or will not be deemed to have been let out. Correct answer is C is the correct answer. Let's check what's institute's answer for 7.2. Institute's answer is also C. Our answer is correct. 7.3 now, what would be the full value of consideration in respect of sale of units to Mr. Gaurav? 5 units are sold residential for the purpose of computing PGBP income. Therefore, provisions of section 43CA will be applicable. Answer: according to 43CA, we have to take either actual consideration, which is 20 lakhs into 5 units, or stamp duty value. But stamp duty value as on which date? Stamp duty value as on 1st November 2022 will be taken into account, which is 22 lakh, which is not exceeding 110% of 20 lakhs, the actual consideration. Therefore, stamp duty value will be ignored, and as per 43CA Proviso 1 and Proviso 2, actual amount only will be taken into account into 5 units. Accordingly, will be 1 crore. First answer A, 1 crore. Let's check what's institute's answer. Institute's answer is also A. Our answer is correct. Now proceeding further with the last MCQ 7.4. Assume that 1 lakh was paid in cash by Mr. Gaurav instead by way of account pay check on 1st November 2022. If that 1 lakh rupees was paid by cash and not by way of account pay check, account pay draft, then we cannot take into account stamp duty value as on 1st November 2022, which is rupees 22 lakh. This cannot be taken into account. We'll have to take stamp duty value as on 15 February 2023, which is 23 lakhs. And if that is taken into account, then what will happen is, then 20 lakh actual sale consideration or 23 lakh, whichever is higher, 23 lakh will be taken into account. However, this is what will happen as per 43CA for Ram. This will happen for Mr. Ram, the seller. The question is asking us about what would be the income chargeable to tax under 56(2) clause 10 in the hands of Mr. Gaurav. Question is asking about the buyer Gaurav. Now Gaurav is a property dealer. It's given in the question. Here it is given Gaurav is also a real estate developer, and since Gaurav is a real estate developer, therefore 56 subsection 2 will not apply. This is the correct answer. Nil, nothing will be taxable for Gaurav. Whatever we discuss will happen for Ram as per 43CA, but 56 subsection 2 clause 10 subclause B is not applicable in this case. Why it is not applicable? Because for Gaurav it will be stock in trade, and 56 subsection 2 clause 10 is applicable only if the given asset is capital asset for the recipient and not stock in trade. So our answer is D. 56 subsection 2 is not applicable. What's institute's answer? Institute's answer is also D. With that, this MCQ comes to an end. See you in the next video with MCQ with case scenario number 8.